Hi friends, how are you? By blessings the God, you are doing well. Friends, today we are going to discuss the 30 multiple choice questions from the management accounting. It's the part 1, friends. So this discussion will be very useful and fruitful. Those who are going to appear the fourth semester of Odisha universities. And this discussion will be very useful to other, the BBA, MCOM, MFC and other related subjects, as well as so this discussion will be very useful and fruitful those who are preparing for the competitive exemption like UGC NET JRF and lecturership examination. So this I have prepared this the 30 vital MCQs as per the model syllabus choice based credit system of that is the government of Odisha. So that's why so this 30 multiple choice questions will be very useful and fruitful to the fourth semester BCOM students. So I will have the request to all of you from beginning to till end, kindly you watch it. Definitely you will be comfortable in the examination. So friends, so watch it, and I am welcoming to all of you to Dr. A B JENA classes. Friends, without delay, we will start our discussion. Again, I am requesting all of you, if during the discussion any mismatch or gap you will find therein, kindly you give your valuable suggestions and comments in the comment sections. Friends, so first MCQ, which of the following is an index of the liquidity of a business? A, it's a debt-equity ratio, B, it's a profitability ratio, C, it's a current ratio, D, it's a stock turnover ratio. Friends, so C is the right option for this MCQ. The current ratio is an index of the liquidity of a business. So C is the right option for this MCQ, C. So next one MCQ, when the current ratio 2:1, it's the rule of thumb, an equal increase in the current assets and current liability would result in what? A, it's increase in current ratio. B, it's decrease in current ratio. C, it's current ratio will double. D, it's no changes in current ratio. Okay? So B is the right option for this MCQ. When current ratio is 2:1, an equal increase in current assets and current liabilities will result in that is the decrease in current ratio. And next one MCQ, the statement of cash flow includes cash flows according to A, its operating and non-operating flows, B, its inflow and outflow, C, its investing and non-operating flows, D, its operating, investing and financing activities. So friends, so D is the right option for this MCQ. D. The statement of a cash flow includes cash flows according to operating, investing and financing activities of the firm. So next one MCQ, cash flow example from a financing activity is the what? A, it's a payment of dividends. B, it's a receipts of dividend on investment. C, it's a cash receipts from customers. D, it's a purchase of fixed assets. So friends, so here A is the right option for this MCQ. Cash flow example, the payment of dividends from a financing activity is the payment of dividends. So A is the right option for this MCQ. So next one MCQ, cash flow example from an investing activity is the what? A, it's the issue of a debenture. B, it's a repayment of long-term loan. C, it's the purchase of raw materials for cash. D, it's the purchase of fixed assets. Friends, so here that is D is the right option for this MCQ. So cash flow example from an investing activity is the purchase of a fixed assets. So D is the right option for this MCQ. So next one MCQ, cash flow example from an operating activity is the what? A, it's that is purchase of own debenture. B, it's sale of fixed assets. C, it's interest paid on term deposits by a bank. D, it's issue of equity share capital. Friends, so C is the right option for this MCQ. And the cash flow example from an operating activity is the what interest paid on term deposits by a bank. So C is the right option for this MCQ. So next one MCQ. Who will be interested in cash flow statement of a company? A. It's the directors of the company. B. It's the shareholders of the company. C. It's the potential investors of the company. D. It's the all the above. Friends, I mean the D is the right option for this MCQ. The directors of a company as well as the shareholders of a company as well as potential investors of the company will be interested in the cash flow statements of a company. So here D is the right option for this MCQ. So next one MCQ. Which of the following statement about the statement of cash flow is not correct? A. It's a cash flow statement is a part of a financial statement. B. It's a cash flow statement is prepared on the basis of cash basis accounting. C. It's the cash flow statement is a substitute of cash account. D. It's cash flow reports are generally prepared at the end of the accounting year. Friends, so B is the right, C is the right option for this MCQ. I mean, cash flow statement is a substitute of cash account. Statement is not correct with regard to the cash flow statement. So next one MCQ. Cash flow statement is based on which basis? A. It's accrual basis. B. It's cash basis. C. It's both cash and accrual basis. D. It's none of the above. Friends, so B is the right option for this MCQ. Cash flow statement is based on cash basis. So B is the right option for this MCQ. So next one MCQ. Interest, dividend receipts or paid by financial enterprise is shown in the cash flow statement under which activities? A. Financing activities. B. It's investing activities. C. It's operating activities. D. It's accounting activities. Friends, so C is the right option for this MCQ. Interest, dividend receipts are paid by financial enterprise is shown in the cash flow statement under the operating activities. I mean C is the right option for this MCQ. So next one MCQ. Interest, dividend receipts are paid by non-financial enterprise is shown in the cash flow under which activities? A. It's that is operating activities. B. It's investing activities. C. It's financing activities. D. It's all of the above. Friends, so B is the right option for this MCQ. Interest, dividend receipts are paid by non-financial enterprise is shown in the cash flow under the investing activity. So B is the right option for this MCQ. So next one, which of the following statements are true about the marginal costing? Marginal costing. A. In marginal costing, fixed costs are treated as the product cost. B. Its marginal costing is not an independent system of costing. C. It's the elements of cost in marginal costing are divided into fixed and variable components. D. It's both B and C. Friends, so D is the right option for this MCQ. I mean, the B statements, marginal costing is not an independent system of costing, and C, it's the elements of cost in a marginal costing are divided into fixed and variable components are the true statements about the marginal costing. So here D is the right option for this MCQ. So next one MCQ. While computing the profit in marginal costing, what would be the next? The fixed cost gets added to the contribution. B. It's total marginal cost gets deducted from total sales revenue. C. It's total marginal cost gets added to the total sales revenue. D. It's none of the above. Friends, so B is the right option for this MCQ. While computing the profit in marginal costing, then the total marginal cost gets deducted from the total sales revenue. So B is the right option for this MCQ. So next one MCQ. Which of the following techniques of costing differentiates between the fixed and a variable cost? Which techniques is used? A. It's marginal costing. B. It's standard costing. C. It's absorption costing. D. It's all none of the above. Friends, so A is the right option for this MCQ. So marginal costing is a technique, or marginal costing techniques of costing difference between the fixed cost and the variable cost. So A is the right option for this MCQ. So next one MCQ. Fixed cost is also referred as to dash in the marginal costing technique. A it's that is the total cost. B it's a product cost. C it's a period cost. D it's none of the above. Friends, so C is the right option for this MCQ. C. I mean the period cost. The fixed cost is also referred as the period cost in the marginal costing technique. So next one MCQ. The profit at which total revenue is equal to the total cost is known as what? A it's a margin of safety. B it's a break even point. C it's a both A and B are incorrect. D it's a both A and B are correct. Friends, so B is the right option for this MCQ. The profit at which total revenue is equal to the total cost is what is this? Known as a break even point. I mean the BEP. So BEP is a point where there is no profit, no loss. So next one MCQ. How is the break even point affected by the fixed cost? A it's if the fixed cost decreases, the break even point decreases. B it's if the fixed cost increases, then the break even point decreases. C it's if the fixed cost remains constant and the break even point decreases. D it's none of the above. Friends, so A is the right option for this MCQ. So the break even point is affected by the fixed cost if the fixed cost decreases, the break even point decreases. So A is the right option for this MCQ. So next one, under marginal costing, the stock is valued at dash. A its total cost, B its fixed cost, C its variable cost, D its that is the none of the above. Friends, so C is the right option for this MCQ. C. Under the marginal costing, stock is valued at a what? The variable cost. So next one MCQ. Variable cost is also referred as a dash in the marginal costing technique. A its total cost, B its that is the product cost, C its the period cost, D its that is none of the above. So friends, so here B is the right option for this MCQ. Variable cost is also referred as the B, the product cost in the marginal costing technique. So next one MCQ. Which of the following is true about the standard costing? A. It is a technique of implementing the cost control within the organization. B. It helps in planning out business activities within the organization. C. It's both A and B are incorrect. D. It's both A and B are correct. So friends, so here A is the right option for this MCQ. So it is a technique, the standard costing is a technique of implementing the cost control within the organization is the true statement about the standard costing. So A is the right option for this MCQ. So next one MCQ. Dash is or dash are or which is or which are the tool or tools of management accounting. A. It's standard costing. B. It's marginal costing. C. It's budget and budgetary control. D. It's all the above. Friends, so D is the right option for this MCQ. Standard costing, marginal costing, as well as the budget and budgetary control are the tools of management accounting. So D is the right option for this MCQ. So next one MCQ. Which of the following is an advantage of the standard costing system? A. It's that is it helps in promoting and measuring the efficiencies within an organization. B, it helps to control and reduce the overall costing within an organization. C, it helps to fix the selling price for the product manufactured within an organization. D, all the above. Friends, so D is the right option for this MCQ. I mean, A, B, C are the advantages of the gold standard costing system. Yes, so D is the right option for this MCQ. So next one MCQ, the loss that arises in manufacturing due to the nature of a product is known as what, or called as what? A, it's abnormal loss. B, it's net loss. C, it's normal loss. D, it's none of the above. Friends, so C is the right option for this MCQ. I mean the normal loss that arises in manufacturing due to the nature of the product. So C is the right option for this MCQ. So next one MCQ, the ascertaining or ascertainment of cost after they are incurred is known as what? A, it's historical costing. B, it's that is the notional costing. C, it's marginal costing. D, it's sunk cost. Friends, so A is the right option for this MCQ. A. The ascertaining the cost after they are incurred is known as or called as what? Historical costing. So A is the right option for this MCQ. Then which sections of the Companies Act 2013 requires that the balance sheet should be prepared in a prescribed format? A, it's section 129. B, it's section 130. C, it's section 131. D, it's section 132. Friends, so A is the right option for this MCQ. Section 129 of Indian Companies Act 2013 requires that balance sheet should be prepared in a prescribed form. Yes, so next one MCQ, which of the following statement is prepared on a particular date? A, it's trading account. B, it's balance sheet. C, it's a statement of changes in equity. D, it's a cash flow statement. So friends, so B is the right option for this MCQ. I mean the balance sheet is prepared of a business on a particular date. So B is the right option for this MCQ. So next one MCQ, which of the following transactions will improve the current ratio? A, it's purchase of goods for cash. B, it's payment to trade payables. C, it's credit purchase of goods. D, it's cash collected from the trade receivables. So friends, so B is the right option for this MCQ. Payment to trade payable transactions will improve the current ratio. So liquidity positions of the firm. So next one MCQ, from the following data, calculate the liquidity ratio if the current assets is rupees 50,000, current liabilities are rupees 20,000, then inventory is rupees 13,000 and prepaid expenses it's 1,000. So here, so the liquidity ratio will be calculated liquidity assets divided by current liability. So total assets is how much? That is the 50,000 current assets, and inventories and the prepaid expenses, I mean the 14,000 will be deducted from the 50,000, and the remaining is how much? It's the 30,000 divided by, so it's divided by 20,000, and definitely so B is the right option. I mean it's 1.8 is to 1. So this is the right option or right answer for this MCQ. So the liquidity ratio will be how much? So 1.8 divided by 1. I mean the 36,000 divided by how much? 20,000. The formula is there. Kindly, so after making the calculation, you give your valuable comment or suggestion in the comment section. So next one MCQ, which of the following is not a part of the liquidity ratios? A, it's current ratio. B, it's solvency ratio. C, it's that is the liquid ratio. D, it's quick ratio. Friends, so B is the right option for this MCQ. I mean the solvency ratio is not a part of the liquidity ratio. So last but not the least, the vital MCQ, what is the ideal liquidity ratio of any entity or any business organization or any firm? A, it's that is the liquid ratio, it's 1:1. B, it's 2:1. C, it's 1:2. D, it's none of the above. Friends, so A is the right option for this MCQ. So 1:1 is the ideal liquid ratio of any entity or any firm or any business. Friends, so these are all about the 30 the top or super or vital MCQs from the management accounting. So it's the part 1, and very soon you will get the part 2 from the management accounting. Friends, once again I am requesting to all of you, if you like this video lecture, kindly you subscribe it, kindly you share it, kindly you forward it. Again I am waiting your valuable suggestion and comments. Don't forget it. Kindly give your valuable comment and suggestion in the comment section. Again I am also requesting to all of you, during the discussion, if any mismatch or gap you will find, kindly give your valuable comment or suggestion in the comment section. And so far as your valuable comments and suggestions are most welcome for the next video. So thanks a billion to all of you.